right. Okay. Um, Good evening, ladies and gentlemen, and welcome everyone to Thai Union Group live webcast for the first quarter year 2018 result presentation. For the analyst meeting webcast presentation today, we are inviting our top management to join our call, and the management who is joining our call today, including Mr. York Ire, our group CFO. And Mr. Ludovic Garnier, our consolidator.
Good evening.
And myself, Bess Balang Wayanon, the head of IR. This presentation will be broken down into two sessions. First, we will spend probably about 30 minutes to 40 minutes on the result presentation, going through the happening and presentation of the first quarter year 2018. And then we will leave about 20 minutes toward the end for the Q&A session. Okay, and for now, without further ado, we will start the call with the introduction and from Mr. York Ire. Please, York, you're welcome on the call.
Yeah, thanks, Kun Best. Good evening and good morning, everybody in the US, in Europe, and good evening to colleagues and analysts in Asia. I want to welcome you to our Q1 2018 earnings call, and as most of you, and I've already received several emails and questions from analysts and from all of you who we are in regular contact with. Of course, this is a difficult quarter for us. And I'd like to jump right to page 6 to share with you our actual revenue, gross margin, and net profit. I can assure you that I have listened very well to a colleague of mine, Elon Musk, who had his earnings call sometime last week, and I can assure you that I will try to be more cordial to questions. I found it actually quite funny how he was not respecting the capital market and his investors. We'll try not to do the same mistake here. This is a difficult quarter for us, as you can see on page 6. Our revenue has contracted to 29.7 billion Thai baht. Our gross margin is 11.3%, an absolute record low in our history. High raw material inventory cost, gross margin remained under pressure at 11.3%. The high raw material inventory cost partially higher than what we had to sell to customers on spot price. So gross margin has really declined in Q1. Our operating profit is now basically on break even. I remind every one of us that around 300-400 million Thai baht in currency gains that we have that we would need to add to this. But even if we add here 250 million Thai baht currency gain that under IFRS would belong to gross profit, this is still a very low gross profit, an operating profit that is really below expectations. But with the activities that we did below operating profit, the currency gains that we have, the other income, the income that we have from Red Lobster, good tax management, good FX management, we've still been able to come out here at 870 million in net profit. That's 2.9%. That is, of course, a weak quarter, but I think given the difficult headwinds in terms of gross profit, contracting revenue, We've been able, with strict cost control, to come out here at a net profit of 2.9%. Certainly not a fantastic quarter, a difficult quarter, but I think we are keeping up with competition, and we are having in Q1 still something to show in terms of resilience to the very difficult headwinds that we see in the market. Now, I'm going to explain a little bit what we see happening. So we turn to page 7. On page 7, you see here all the different elements. An EBITDA that is 25% below where we had been 1 year ago, a net profit that's 40% below. Of course, that's not great. However, we had cash generation of 1.4 billion Thai baht, which, if we look at EBIT cash conversion, is nearly a 1-to-1 conversion. So we've been able to reduce inventories. We've been able to manage net working capital well. And I think all this has helped at least to have some good cash generation and a first little step in terms of deleveraging our net debt to equity from 1.38 times to 1.35 times. I guess share price development, I don't need to comment much. It's clearly a signal of our challenged underlying performance. I think for me, it is to highlight on the positive elements that we have: solid cash flow, an improving debt to equity ratio, and a net income of 869 million in Q1, despite a really challenging gross profit and revenue environment. I'd like to change to page 8. You can see here on page 8, this is where we are coming from, and I think you are seeing here a gradual decline in terms of gross profit, and I think this is exactly what we've been talking about over the last couple of quarters. I think our net income has been holding up quite well, but we are seeing now with this very difficult raw material price environment, not only in tuna, but also in shrimp, but also for pet care, a really challenged gross margin development. And this is now the first time that we are recording a year-over-year drop in revenue. If we split the revenue contraction of 5.5 into FX effects and into organic development, we have an FX effect of around 3%, and we have an organic effect of around 2.5%. And Ludo will explain a little bit more later on. So organically, if we look at real terms, revenue has been contracting. Volumes are down around 1.5%, especially in the shrimp segment, in our frozen segment, that is very challenged by the difficult foreign currency development of the Thai baht. But I will comment on that a little bit later. If we just look a little bit at recent developments, page 10, we continue to invest in the sustainability. And sustainability, as you by now know, is really one of the key areas where we want to change the industry. We want to show the industry and the consumers that sustainability and looking for the environment is something that goes hand in hand with being a large multinational company. We've joined the global Ghost Gear initiative, and we want to drive this growing problem of abandoned, lost, and discarded fishing gear. We've joined this initiative and you will see again some activities in this regard. We've now with Sea Change a very established sustainability program, and we believe in the long term this will pay off. Consumers will recognize the effort that we have put in, and we will do good to consumers, we will do good for the environment, and we will do good for human rights in Thailand. And this is one of the key pillars of our strategy. Another pillar, innovation. Our project, we call it internally Supernova. It's a tuna slice, the yellowfin tuna slice, has been awarded as the best new food service product in the food service category at the Boston Seafood Show. And let's see the further seafood shows that we have in Brussels, where this product also showed good success. So I think the market recognizes that this product can change the way how people use tuna on their sandwiches and in the way how they consume seafood. In February 2018, together with Nestle, we've officially inaugurated a demonstration boat to promote and raise the understanding of human and labor rights in the Thai fishing industry. So all of this goes hand in hand with our Sea Change program. And also in the Thai market, we've now brought further innovation in place after Select Daily, the daily choice for sardine and mackerels. We've now launched the Select Quick Meal, which is available at Tesco, Lotus, and Tops, which basically takes the preparation concept for sardine and mackerels, where you take a can of sardines, we bring this into tuna, and we take the same format concept with spicy sauces, with seafood sauces that you can pour over a bowl of rice and eat it directly and consume it directly out of the can. We've brought this now into tuna, and we've just launched this new product, Select Quick Meal, in order to enhance the category in Thailand as well. On page 11, a couple of other developments. First and foremost, we have been able to host the Prime Minister of Thailand and his cabinet members to visit Thai Union Group in Samut Sakhon, which I think was a very good showcase of Thai industry collaborating with the Royal Thai government, and also bringing some of our sustainability issues closer to the government and asking for their support. We have in Q1 and part in Q2 continued our investment in our subsidiary companies. We've bought out the minority shareholders of our tea holding business, which is the Thai retail business. So we own now 100% of this activity, and we've been able to increase our shareholding proportion in Thai Union Feed Mill, a very, very profitable business, from 51% to 66.9% in total paid up capital. And of course, we're participating in the Asian investment community in Finance Asia's best performing or best companies awards. So in corporate governance and social responsibility, we continue to show very strong contribution. Last but not least, on page 12, and I think this is also showing for those of us who feel that there are still some untapped markets globally. We're joining a leading Russian seafood enterprise, Maguro, in their activities in Russia. We're buying 45% of Maguro Dalrom Pryba. Dalrom Pryba, or Captain of Taste, is the #1 canned tuna producer. They're selling a lot of glass jars, a lot of premium products. They're the number one player in Russia. It's a fragmented market, and the overall business is not very large. It's $45 million approximately. But we have joined the owners of this business with 45%. We will manage the business together. The owners will still stay on to continue to be our partners in the Russian market. And over the next 3 years, we have options to increase our shareholding to 51% and to 80%. The transaction is still subject to approval with the Russian antitrust authorities. But this is one big step into another top European seafood market, strongly growing in the seafood segment. Tuna is the fastest growing segment in Russia. And with this investment, we plan to participate in the growth journey around the branded seafood segment in Russia. I'd like to jump to page 15. The key takeaways for the Q1 results, as I presented before. Our top line is challenged. We have sales of 29.7 billion. We report a growth, or a contraction of -5.5%, mainly from Thai and US operations. Ignoring exchange rate, our contraction would still have been 2.8%, and our volume sees a very small decline of 1.6%. So currency didn't help us very clearly, but overall, even the underlying business is challenged. And part of this comes, of course, from difficulties in the tuna segment with sharply declining raw material costs, which of course translate into lower sales prices. The private label business, which is still nearly half of our ambient seafood business, is focused on spot market prices for skipjack or yellowfin tuna, and the sharply declining prices to see top line contraction, but also a challenging development in our frozen shrimp and frozen seafood business that we are recording with an oversupply of product in the US, with a very difficult currency development situation around the Thai baht. The gross profit margin has been weak with 11.3%. All segments face gross profit margin dilution, except sardine and mackerel, which is holding up quite nicely. Tuna and the frozen business are the two most challenging segments in terms of profitability. As we've reported now several times, we are negotiating price increases in Europe, and we have been very successful with that. This will kick off in Q2. New prices are active and are live starting April in Europe. So Q1 is still affected by this lack of success in renegotiating pricing in France. But I think starting Q2, we will see here some improvement. Same in the US. We've started to renegotiate prices in the US. There is volume pressure coming from this in the US, but also in the UK, for example. But we feel we need to do here more around price quality. And the private label business in tuna especially is really challenged during this period. And I'll show you a slide on this a little bit later, where you see that the sharp declining tuna cost is taking its toll on private label margins, because the spot prices have fallen clearly below our average inventory cost. As a result, also the pet care business, which is using a lot of byproducts and production, excess production from our tuna business. This business is under pressure. Of course, we are pushing also the raw material pricing to pet care, and you see here a substantial margin pressure in this business, which is quite successful and quite profitable, but we have seen here quite a bit of margin contraction. In terms of cost control, we are continuing our prudent cost management on SG&A. You will see us be even more vigilant in our SG&A and especially plant overhead direction. So I think we need to continue in this difficult year with a very clear statement in terms of overhead cost, in terms of non-demand generation cost, and we need to keep this very, very tightly under control. I think we see some successes there. Overall, the Thai baht is really working against us. It is a great development for the Thai economy. Of course, to have such a strong currency, and it's good for the Bank of Thailand to drive their strategies in terms of the overall economy. Now, for exporting businesses like us, highly labor-intensive exporting businesses like us, this is putting a pressure on our cost structure. I'll come to that a little bit later. Overall, we assume that there's around $16 million in Q1 alone that our cost base has increased, and it is very, very difficult to pass this to our customers, this cost increase, because competing countries like Indonesia, like the Philippines, do not have the same cost disadvantage. So I've been sharing with some of you my concerns around this already for quite some time. I don't expect the Thai government or the Bank of Thailand to change their currency strategies anytime soon. So we do expect the Thai baht to remain strong for some time, and this puts pressure on plant productivity and on overhead productivity, and I think we need to reinvigorate our efforts to look into the cost structure of the business. Non-operating items support net profit. We've posted FX gains of 580 million Thai baht in Q1. We have a lower tax exposure, of course, from a very weak profit position, and we see a Red Lobster contribution of 137 million in positive share of profit as a mixture of our dividend yield, interest yield that we get, the tax savings that we get, and the operating share of profit, which in Q1 seasonally is good. I'll comment on that a little bit later. On page 16, and this shows you a little bit the raw material volatility and the difficulty here to predict what is happening. You had a continuous increase in raw material cost quarter over quarter, starting basically in the second half of 2016. You will see this average quarterly cost has increased. We had spot market prices of $2,300 in October, and then we have a sharp decline of 22.5% in the course of a couple of weeks, and this is causing, of course, a lot of challenge for our inventory costs. The inventory costs have been higher in Thailand than the 1550 or 1480 that we saw in January and February, and this is causing a lot of margin pressure for our private label business. Normally, if price developments are more gradual, not as extreme as in this past recent months, we can weather this very well in having an average inventory cost approach, but with a sharp decline of 22.5% from one quarter to the next. This is nearly impossible to have the right inventory mix available. Just look at the lowest line here, year-over-year change in tuna cost plus 30, plus 17, plus 40, plus 35, and then in the next quarter, minus 3.5. So this is a really challenging development, and it took some toll on the margin of our private label business in Thailand, which is why we're posting a real depressed margin in Q1. On page 17, and I'd like to shape the discussion a little bit and put what is happening to Thai Union in Q1 a little bit into perspective, into a little bit of a more longer term perspective. So if you look at the last 4 or 5 years, you see three charts on this graph. The first and second is looking at our competitors, our peers, a group of peers, international as well as Thai peers, and you see their revenue development to be basically flat, plus 0.3% over the last 5 years, 13 to 17. If you look at Thai Union, we are posting nearly 5% per annum growth over these 5 years. So comparing the competition and consumer goods peers, we do appear to have a superior growth performance for a longer period of time. Looking at net profit, we see a very similar thing, except for 2016, we have outperformed net profit growth year over year quite substantially. We had 78% NP growth in 2014, 6% in 2015, flat in 16, another 15% in 2017. So I think if we look at the peer group that we have chosen, and of course you can always argue, is this the right peer group? Should there others be in or others be out? We do feel that we've done more than the competition, and we feel we are ahead of competition. This is not to whitewash or excuse the Q1 performance, but I think it does put things a little bit into perspective on where we stand as Thai Union, and the headwinds are really hitting us in Q1. And then, last but not least, and this is a little bit of a more longer-term perspective from Bain Consulting. So they have looked at the last 10 years organic growth of consumer goods companies, and you can see how the growth trend in the consumer industry, and I'm sure you see this as analysts for other companies as well, the growth is slowing down, and large branded businesses are being challenged. And I think we are facing here a very normal, or we're facing what other consumer packaged companies are also facing. Well, but at the same time, we have been growing in that period where others' growth has been going down. We had been able to show a growth of around 5% per annum. And I think this is a good sign. And even for this year, despite a weak Q1, we are holding firm on our growth objectives. We do want to grow in 2018, and we have a lot of pockets where we feel this is still possible. Now, I'd like to pass to Ludovic Garnier, our head of accounting, controlling, and consolidation, to share a little bit the next pages and the details of the financial performance.
Thanks a lot, Kun-Jorg. Let me jump page 18. So here we have our usual slides regarding the sales and the top line performance. You may know that Q1 is traditionally a low quarter for us in terms of revenue compared to Q2, Q3, and Q4. And indeed, in Q1 18, we achieved a performance just below 30 billion baht at 29.7 billion baht. As explained by Khun Yorg, it was a weak performance. We are declining by 5.5% year on year and by 15% quarter over quarter. In terms of dollars, we achieve a bit more $900 million. I would like to go directly to page number 19, where we explain more this top line weak performance. You can see that the main driver for Q1 18 performance is the FX. We have a negative net impact of 760 million baht decline coming from the USD depreciation, and which was partially offset by the euro and the GBP increase also. The main driver really this quarter is the USD effect, which is minus 1.1 in our top line. So all the performance coming from our frozen business and our ambient business in the US, translated in Thai baht, has been declining by something like 10% just due to the FX. If we exclude this currency impact, our performance is still declining by 2.8%. And here you have the breakdown between the different segments that we have. Overall, the segments are declining. The main drivers are really the shrimp business, first of all, the sardines and mackerels, the lobster business, and also the value-added and other products. The pet care is also declining slightly. We have two segments which are growing, the salmon ambient and also the other seafood frozen. But overall, the picture is weak, as we said, for Q1. Moving to page number 20. So here we have our usual breakdown by geographic and by business. We don't have real big change in Q1 18. We have a slight increase of the domestic market in Thailand, and also a slight increase of the private label business compared to the branded business. Page 21. Here we wanted to focus on two specific situations. The sales within Thailand, which are growing by 35% year on year, which is quite a good success there. We launched some new products, the Q-Fresh, the Monori are there and are supporting the strong sales. The sales in Asia also are growing by 41%, excluding Japan and Thailand. And this is mainly explained by China and Middle East. And we can really highlight the China, where we really have a huge growth there, and it's very interesting, and we have some very good forecasts for the year to come. Page 22, we wanted to focus on chicken of the sea, which is part of our core business and which has been really suffering in Q1 18. Very specific situation in the US, because they have to face both with the USD depreciation, and also they had some high-priced inventories, and they had to face with a very big decrease in the tuna price. Having said that, the competition in the US is also very strong, and it's very difficult to pass through some tariff to the retailers. Due to this situation, we have first of all a decline in terms of sales, but also in terms of profitability. And if you look at the bottom left of the slide, you can see that in Q1 18, Cozy was a loss-making situation in the first quarter of 2018. We already faced with this situation back in Q4 2016. However, since 2017, the Cozy was positive on this one. In addition to this, we have also the impact. You know that we have the DOJ civil complaint in the US, and we are incurring some legal costs in the US, which are also waiting on the profitability of our US subsidiary there. So here on page 23, and this is maybe the main impact to keep in mind for this quarter, the weak gross profit that we have, so gross profit in terms of absolute amount is declining by 26% compared to Q1 17, and declining by 21% compared to Q4 2017. And we achieved in Q1 18 a low record of 11.3% in gross profit for the Q1. The main explanation for this, and I will get back to this later, is the baht increase versus the dollar, is also the raw material prices and especially tuna, which has been declining very quickly at the end of 2017 and beginning of 2018, and it's quite difficult for an OEM business to reflect and to pass through this tariff when it's very quick and very strong. Page 24. So here we try to estimate what was the impact of the baht increase versus the dollar in Q1 18. So here we looked at all the costs which are denominated in Thai baht in our P&L, and it's mostly some factory labor costs, some SG&A in Thailand, and also part of the business of the shrimp business, which is mostly denominated in Thai baht. And the increase of Thai baht versus USD by 10% has an impact of $16 million of 500 million baht in Q1 18. And here you have at the bottom left of the slide the comparison with our main competitors for the OEM business, so Vietnam, Indonesia, and China. And you can see that Thailand has a very unique situation because that was the only country where there was an increase by 10% of the local currency, whereas in Vietnam it was only by 2%. In Indonesia, the local currency decreased by 2%, and in China it increased by 8%. And here it's very difficult for our OEM business to pass through this impact to the retailers because basically we are the only one to have this one except for our Thai competitors. And this is part of the reason of the decrease of profitability in Q1 18. Slide 25. We also try to explain the difference and to show you the difference between the spot price, the tuna spot price, and the inventory cost that we have here. And you could see that in Q4 17 and in Q1 18 we had a specific situation because the spot price was below the quarterly the inventory cost. And here it's a difficult situation because it forced us basically to decrease our selling price to remain competitive and to protect also the volume that we have here. And this situation explain the gross profit decrease that we experiment in Q1 18. Slide 26. So here one of the success of the quarter is related to the SG&A, which are declining from 11.8% of the NSV to 11.2%. However, it was not sufficient to offset the GP decline. As a consequence, our OP is almost break-even, 25 million baht in Q1 18 compared to 845 in Q1 17. And the OP margin is also very low due to this situation. Slide 27. We performed in Q1 18 some changes in accounting policy and presentation. You can see here the impact in terms of value of the inventories, return earnings. It's mostly some reclassification from cost of sales to selling and administrative expenses. So here you can see the impact on the balance sheet at the end of December 17, the return earnings, and also on the P&L. These impacts are not huge. We are mostly talking for the quarter of a 200 million baht reclassification. We have over the quarter a small impact, 36 million baht decrease of the profit for the period, because we have some impact coming from the seasonality and the level of inventories. So it's mainly a reclassification from one P&L line to another one, but we have a small impact due to the seasonality and the high inventories that we have at the end of Q4 2017. So moving to slide 28, I will not comment long. The EBITDA is just a consequence of what we discussed just before. Slide 29. So here we have the net profit, which was supported by the increase in other income by 12%. We recorded in Q1 18 something around 600 million baht FX gain, and this also explained the weak OP that we had. The profit from associates company is growing in Q1 18, mostly coming from Avanti overperformance, and we had some tax saving also in Q1 18. Page 30, we disclose the one-off items, so we have mostly two one-off items to disclose in Q1 18. The first one amounting to 140 million baht is related to gain on sale of asset, and the second one, amounting to 39 million baht, is related to a specific tax credit we got in our ambient European business in Q1 18. Slide 31, I will not comment long. The EPS is just the consequence of what we discussed before, and there is nothing more to add on this. Having said this, I would like to pass through back to Khun Yorg to comment on the Red Lobster performance, page 32.
Yeah, thanks, Ludo. Let me just quickly comment on Red Lobster. I think Red Lobster, we explained the seasonality, I guess, before. So we've returned in Q1 back to a good profitability, 137 million in the quarter. However, of course, this is less than where we had been a year ago, and this is, I guess, consistent with what we've explained. The business is a challenge in terms of guest count. We need to focus on same restaurant sales. We need to focus on restaurant levels. We've made a couple of changes to the business. We have replaced the head of operations in the business. We have also restructured the organization to have operations report to the CEO directly on equal par to marketing and to other key functions. So I think we've balanced here the approach a little bit. We see a good trend in terms of off-premise growth, but all of this is not helping us to be better than a year ago. We are still slightly below one year ago with 137 million Thai baht in share of profit. The other income is comparable throughout the quarters. I think here is only the FX effect that the minus 10% that counts into this. So we still get our 8% interest on the convertible instrument. We get our management fee. We have finance costs that is more or less stable, and we have a good income tax benefit from the transaction. So we have a net income contribution of 266 million Thai baht, share of profit 137 million. So I guess overall, if you look here quarter on quarter, we had one quarter miss in Q4. Overall, it is still a good value accretive investment, but it's also clear we need to get operating performance up in order to make this a good, successful investment for us. If we move to the next page, strong cash flow development despite the weak profitability. So we've been able to provide 1.4 billion Thai baht in terms of quarterly cash flow, free cash flow performance, and the majority of this is a result of very strong inventory reduction, prudent account receivable development. We've started a couple of factoring programs to make this to really help our cash flow performance and help us on our objective to drive deleveraging and bring our net debt to equity closer to 1.2, where we feel much more comfortable in terms of managing the business and then continuing further investments. So I think we are looking at 1.35 in Q1 net debt to equity. That's a little bit of a reduction, and it's clearly driven here by our cash flow performance and our net working capital development. On page 34, this is where you can see here our funding structure, not materially changed from end of 2017. We have one debenture that is due in February 2019 that moved from long-term to the current portion of long-term debt. But overall, I think we're still here covered very well on the long side in terms of interest-bearing debt, and we have a very attractive exposure in terms of cost of debt. On page 35, this is where you can see the bridge. End of December, 66 billion in net debt. We're now at 65 billion. You see the EBITDA generation. You see the good reduction in net working capital in Q1. We then have strong CapEx. We need to look more into CapEx. This is probably one learning out of this page. The CapEx development is something we are very alerted, and we are putting much higher hurdle rates in place to keep CapEx under control. If we then look at page 36, I don't think I need to comment on this very much. You see, net working capital has come down. That's a good thing. With the low revenue in Q1, turn rates don't look great, but I think on average, the reduction in inventory and the reduction in net working capital is something positive. We see ND&E to reduce, but of course, other ratios don't look great. Page 37, and I do recognize that we owe you a little bit of an update. We continue to support the Department of Justice in their investigation in the antitrust complaint in the United States. We have received a provisional leniency agreement. We've signed a provisional leniency agreement, which, if we can uphold it, and it's entirely up to us in how we cooperate with the DOJ, will lead us to not face any criminal investigation fines. We will not be criminally charged. None of our employees will face jail time, nor will we be prosecuted. But on the back of this, you remember we have civil lawsuits ongoing. Plaintiffs have filed lawsuits, a little bit above 60 lawsuits against us. They all are worded more or less the same way. And some of them have been combined into a single class action. Some of them are direct action plaintiffs who sue us directly. So we are at this stage still until end of Q1 unable to predict the probable outcome of these discussions and negotiations with plaintiffs. However, we have started, or Tri-Union Chicken of the Sea has started with some of its larger customers to discuss these complaints with them. And there is an expectation that for selected customers, there could be settlements. A lot of this within this year, settlements within this year. A lot of this will depend on plaintiffs realizing that this industry is not a very profitable industry. You see this in our own numbers in Q1. You see this, we shared with you the Chicken of the Sea numbers in the US over the last couple of quarters. Chicken of the Sea is now loss-making in Q1. This is a very, very, very competitive market with ultra-slim margins. And some of these plaintiffs, I think the message needs to be there does not appear to be a superior profit pool where there's a belief that Chicken of the Sea could afford any substantial settlement monies to be paid. Of course, we need to discuss this with plaintiffs, but I think the message here is we've started with large customers to discuss their complaints. I think we have success in also making clear this is not a very rich industry, and people need to be realistic approaching settlements. And we are confident that within this year there may be the first settlement happening, but we need to see how the discussions develop. And with this, I'd like to jump, and I'm aware that we are drawing on time, jump to the details of the financial results, but maybe we can be a little bit quicker in the remainder of the session to still be able to answer questions.
All right. I will just take the stage on from here. On the slide number 39, we see here that the key operating factor, like the raw material, all has been seen a declining trend. For all, tuna price has been declining, especially by 22% compared to the last quarter. Shrimp price has been down by 14% compared to last year. So these are some of the key causes for that attribute to our margin decline. For the exchange rate, why the Great British Pound and Euro remain stable compared to last year? So, I mean, it has been appreciated against Thai Baht by about 1 to 3%. Thai Baht has appreciated very significantly by 10% against US dollars. And that is the cause of our weak sales growth and lower margin as well. We are going to slide number page 43 on Ambient Seafood. On Ambient Seafood, we have seen the volume has been declined by 6.2%. On the other hand, we have still seeing the sales decline by only 1.7%. So this discrepancy has been explained by the fact that we can manage to selling price adjustment to reflect the higher tuna cost. However, we have seen gross profit margin continue to decline at 14% during the first quarter of this year. That is down about 3% compared to last year. This is partly due to the fact that there is a sharp tuna price decline. So that affects the gross profit margins of tuna. That is mainly due to the fact that we have the high price inventory. And moreover, the U.S. tuna business gross profit margin was under pressure due to the reason mentioned above, such as the U.S. depreciation and the sharp decline in tuna pricing. On frozen and chilled seafood and related, while we still continue to see the quantity increase by about 2%, the revenue has been declined by 8%. This decline are partly due to the current U.S. currency depreciating against Thai Baht by 10% compared to last year, and the fact that the shrimp price has been falling by 14% compared to last year. So these are key contributors that account for the fact that the sales revenue has been declined by almost 9%. The gross profit margin has also been under pressure at about 6%, down by about 1.5% compared to last year. These are attributed to, again, the baht appreciation has played a big part into this, and the U.S. frozen business are the key party that has been affected by this fact. For the pet care and value-added business and others, the sales has been declined by about 8.2%. These are partly due to the reclassification of the value-added business, while on the other hand, the pet food business has also seen a marginal sales decline. That is due to the product price adjustment to reflect the recent decline in tuna pricing. While the margin, the gross profit margin has declined to 16% compared to last year of 23%, much of this decline are accounted for due to the reclassification of the cost structure. Although, I mean, if we compare to the recent quarter, the gross profit margin of the pet care, value added, and other segment remain relatively resilient at about 16 to 17%, like the previous two quarters. In terms of the regional sales breakdown, clearly the US are not in our favor. The first quarter year 2018, US and Canada sales are at 11.8 billion. This is down by 10%, 10.4% compared to last year. This is largely due to the US dollars has been depreciating against Thai baht. As a result, the translated revenue and the export revenue into the US has been affected. So these are affecting factor both for the chicken of the sea canned tuna brand and our frozen business in the US. For the European market, the sales has been show a decline by only 3.4%. While the currency are relatively stable, we have seen some volume sales has been declined. Part of this is due to our European business has been demonstrate ability to pass on costs and increase the selling price. So that has been partly offset by the fact that our volume sale has been declined. But we'll still continue to see the European salmon business and Rügen fish continue to deliver a good operational improvement. Now for Thailand, we have seen a good strong sales growth at 35% compared to last year. These are due to the fact that the group has been Thai Union Group has been focusing more on selling product in domestic market to offset a weaker export sale. So clearly the initiative to launch new product like the Select Daily, Monori, or even a frozen seafood brand Q Fresh has started to yield good results. For the emerging and the rest of the world, market has been declined by 15%. But if we stripped off the Japan market, we also show the weakness. We continue to see a good growth in the real emerging market in the like of Chinese market and the Middle East market, which are continue to deliver a good growth. For the gross profit margin for the group, we will pass this. We will just pass it to the stage back to Jörg to discuss the business outlook and if there is any more positive sign for us to be looking forward to. Jörg, please welcome on the line back.
Yeah, thanks, Bess. I think we've covered some of the questions that had been raised in the run-up to this call. But let me address a couple of moderately positive signs of 2018. I think we're all clear. Q1 was tough. At the same time, I think we do see some positive elements. One, we've been able to pass price increases in Europe successfully for our branded business in Europe and in the US, and many of them will become effective starting Q2 2018. I think that's a good news. I think there's hopefully some relaxation on the margin front. We have some more positive outlook on the shrimp cost, and some improving market dynamics in the US. I've just come off a call with our president of the frozen business in the Americas, and he mentioned that he is able to discuss with clients in the food service and other areas, new deals, new growth, new ideas how to be attractive here. On the cost front, let's be clear. This is another tough year. We will initiate a new cost program of a little more than 1 billion Thai baht in cost reductions, and this time we'll go one level deeper into factories and discuss how we can increase competitiveness and compensate some of the currency induced cost increases that we see here in Thailand. We also see spot prices to get closer to our average inventory costs, so there's a much more balanced outlook. And I think in the run up to the rest of the year, I think we still see a $2,000 Thai baht tuna development. So I think we do hope to earn back some of the losses that we've generated in Q1 in coming quarters. We also have in some of the businesses that are really challenged for us. Our chilled salmon business in Europe, our lobster business in Canada. We have relooked into management. We've added capabilities in Canada with a strategic partner that we've put in place to help us manage this business better. We have better price management in Europe with the chilled salmon. We have a new management in our Scottish salmon business with a veteran sales executive that we do have to drive growth for our salmon business out of Scotland. So I think there are some good signals on product innovation, on marine ingredients, our oil business. We will go live this year. There has been a delay, as we've communicated in the past, but I think there are some good trends and some good directions. And I can assure you the very strong cash focus that we have, our very clear intention to deleverage the balance sheet and get to a range that is much closer to 1 to 1.2 times net debt to equity. So I think there are some moderately positive signals for 2018. Management is absolutely focused on these topics, but let's also face it, some of the things we do not have under our control, and we need to implement corrective actions as we speak, as we have done in organizational changes. I remind you, we've made quite substantial organizational changes in our European business as a result of some topics that we saw in appropriate business focus and margin focus there. So we've taken out substantial cost out of the European structure. We've made changes to the lobster business in Canada. We've made changes to the organization in our joint venture with Savola in Dubai. So I think we are clearly focused on the right things. Not everything works at a press of a button, but we see a lot of the initiatives have an effect on our business. But we also need to acknowledge that there's a tough environment out there going forward. And with this, I'd like to open. I know we've already used up most of the time, but I think we can still spend a couple of minutes on questions. And I'd like to open the Q&A with this.
Okay. And here we got a good list of questions coming in. I'll just go through them as much as possible. For the first question, the question is regarding tuna price and tuna business outlook. Tuna price seems to be going up again. What do we think the impact of the rising tuna price is going to be for us? And how do we think about the tuna business outlook into year 2018?
Look, I think as I mentioned, we've discussed this several times. We believe tuna prices will continue to remain strong. We do believe that $2,000 on average for the year 2018 is not impossible. It all depends a little bit on timing. We've seen now a couple of months with low prices, but as you have seen in March, April, prices have shot up again. So I don't think we should believe that prices will, in any shape or form, be substantially lower than 2017.
For the second question, the shrimp price seems to be actually falling in the first quarter year 2018. But why does the frozen margin business is still decline amid the falling shrimp price? And if you could share the outlook of the frozen business, that would be great.
Yeah, so look, we have two major businesses in the shrimp in the shrimp market. So we have our trading business, $850 million of shrimp, lobster, finfish, crab meat in the U.S. And this business is suffering continuously on the lobster side. We had the lobster margins to be very compressed due to huge drop in lobster meat prices. Lobster meat is when you take a piece of lobster, it separates one into a tail. The tail has been sold between, I don't know, $16 and $17 per pound. And you have the lobster meat. And the lobster meat a year ago, 1.5 years ago, was sold at $28, $27, $26, $27 per pound. And this price came crashing down to $18, $19. We have now kind of leveraged this out to around $21 per pound lobster meat, but this is still very, very challenging for us. So you have compression there. When you see now the new lobster period, there is the initial indications are not too bright in terms of number of catch, so it means that cost could be rather high. That can be a positive for those who carry inventory. We do carry some inventory. So we need to see how this plays out. But on the shrimp side, there's a lot of oversupply in the U.S. market. So there's substantial margin compression. We're running this business typically at an 8-9% gross margin. We are now down to 6-7%. So that's really challenging. And for the Thai shrimp business, that's still a $250-300 million business. Look, this is where the Thai baht strength is not helping us. It's very clearly the Thai baht strength is leading to a preference for India, for Vietnam, Philippines, Indonesia, Ecuador. All their currencies have not turned against the US dollar as the Thai baht did. So the Thai baht is really challenging here for us. I don't think that this will in any way be easier in the coming months.
For the next question, there has been a concern about the Thai baht movement that affect our profitability and competitiveness. What is our view on it, and how are we expecting to deal with such a volatile baht against US dollars?
Look, very clear. I think we said it. $16 million in Q1 alone is our cost increase in US dollar terms. This is nothing that can be restructured or eliminated through efficiencies overnight. So I think one way to deal with this is to strengthen our cost-saving activities in Thai plants. We have initiated very hard cost-cut programs for our Thai plants. We do expect to do more here in Thailand in terms of labor productivity, in terms of labor reduction, in terms of overhead reduction. That will be one part of the change. But I think some part of it, I think we do have to expect during this period a depressed margin. And I think to recover this through customer pricing is, of course, desirable. But I think we also have to stay realistic.
Okay. The next question is, there has been a line in the profit and loss statement, but what is the gains? Can you explain the particular of the gains from the sales of associates?
So, look, we have financial investments in some subsidiaries, subsidiary companies, and in some subsidiary companies, if there are marketable securities, I think if the price is right, there is also an opportunity to sell some part of this. This is what we've done. This is no structural change in our strategic commitment to affiliated companies or to companies that we partner with strategically. But it is an opportunity to gain benefits in times of strong capital markets or good valuations of assets, and this is what we've done. We've sold shares in some of the activities that we own where it doesn't affect our strategic interest, and we've capitalized on some of these holdings.
All right. And the next question is what can you tell us a bit more about the operation of Red Lobster business during the first quarter, given the high season and the outlook for the business into year 2018?
Look, the key highlight on Red Lobster is that we have been able to slow down the revenue loss. I think that's a good news. I think with the 50 years anniversary, with the new generation menu, next generation menu, with some of the initiatives we have, I think we've been able to slow down revenue loss, but year over year, I think we are still down 5 to 6% in terms of guest count. This is more than the market. I think it's clear Red Lobster has lost market share. I think we need to be very honest about this, and we've discussed this very seriously with management. That's why there have been changes to Red Lobster's management. We've made organizational changes. We need to bring back the company to growth. The company needs to not think about the market and market trends anymore. The company now needs to think in absolute growth quarter over quarter, and we're having very serious discussions with management about this. So there's been a contraction of between 5 to 6% year over year in terms of guest count, and this is what we have to turn around. We have to come back to zero, and we have to come back to net guest growth quarter over quarter and year over year. So the underlying performance is weaker than we had hoped for, weaker than we had expected. I think if you recall, we bought the business at 135 million EBITDA. The business has then increased the year after the acquisition to 147 million EBITDA, and we're now on a comparable basis of around 125, 130 million EBITDA. So we've lost quite a bit of profitability over the last 12 months, and this has led to very serious management changes, and it will continue to put pressure on management. We have to turn this around.
Okay, this will be the last question on the list. So regarding the acquisition of TUMD Luxembourg, the new acquisition that we invest in 45%, can you explain a little bit more about the company and whether the company is profitable in nature?
So the company is profitable. It's very good. It's a good news. I think with all the experience we have on M&A, with the good experience or the bad experience we have, it's very clear we want to buy into good and well-managed companies. That's why we've joined with Alexander Panin, who is the CEO of Maguro and Dalron Pruba in the US. It's a $45 million top-line business. The business is clearly profitable with 6% in net profit. Good EBITDA development, good growth development, very good, very strong management team. They have around 11% market share in the ambient seafood business. They are giving us a brand platform for ambient tuna, for our product platform, but also for the frozen business. I think this is a very good expansion into one of the fastest growing seafood markets in Europe.
All right. And thank you very much, and that's very clear. And for the interest of time, I would like to conclude the live webcast for this Thai Union Group, the first quarter of year 2018 result announcement today. I would like to thank you, Mr. York Irie, our Group CFO, and Mr. Luluya Kanye, the Head of Group Accounting and Controlling. And I would like to thank you very much for all your time and interest in participating in the event. If you have any further inquiry, please feel free to contact IR department at any time during the office hours. Wish you have all the good days. Thank you very much.
Thank you. And for those of you in Bangkok, see you tomorrow at the analyst conference.
Thanks a lot.
Bye bye.